Hello, everyone. Thank you for attending our podcast. The name of this podcast is Real Estate Investing, the Good, the Bad, and the Ugly. So, again, this is SeeWing Yee from the Real Estate Network. Our company specializes in helping investors, regardless of their actual physical location, to help them buy turnkey investment properties, cash flow properties in the fastest markets in the country. And we've been doing it for many, many years. So right now it's an exciting time. And my guest host is Mr. Richard Advani from Supreme Lending. He is an investment loan advisor. He does loans in all 50 states for investors. He also does as well owner-occupied loans as well for people that buy a primary home. Although I'm based in Northern California and Richard is based in Southern California, but once again, we do business with investors in all 50 states. So anyway, the reason why we chose this topic, real estate investing, the good and the bad and the ugly, is because I'm using one of my favorite movie stars, Mr. Clint Eastwood, right? Everybody knows who he is, especially the old guys out there. So he has done many spaghetti westerns, if you will, in Hollywood, where he played a cowboy, right? So the good, the bad, the ugly. He's the good. He's a good guy. Then the bad guy is the guy. The bad guy is played by Lee Van Cleef, and the ugly guy is played by Eli Wallach. So anyway, so the reason why I like to use Clint Eastwood analogy is that during all his westerns movies, he's good with pulling the trigger, right? He's the fastest draw in the West. He kills all kind of guys with just one bullet most of the time. So he have the ability to pull the trigger. So I'm gonna start off with the good. Richard and I are gonna go over our own definition, the good, the bad, and the ugly. So with that in mind, the good is that just like Clint Eastwood, you as a real estate investor, regardless of what's going on in the economic environment or what we hear and see out there, all kind of chatter, all kind of negative news, positive news, very just sometimes information out there is very overwhelming. Sometimes it makes people to get paralyzed about real estate, right? So be like Clint Eastwood. The good in real estate investing, in my definition, is just like Clint Eastwood in his Western spaghetti movies. He has the ability to pull the trigger. He's very disciplined, he's very focused, and he's very confident in his skill set, which is pulling the trigger and killing all the bad guys. So you as a risk investor, should, adapt some of his Clint Eastwood skill set, right? And just, do your research, do your diligence, and quote unquote, pull the trigger, execute on your action plan, and buy the investment property, buy the cash flow properties in good areas, and then invest for the long term. So that's my definition of good. So Richard, what is your definition of good in the real estate environment that we're experiencing right now in 2021?
Well, it's hard to follow up with that because you tied that right into the theme. But I think good is you hit the nail on the head. It's execution. It's doing something versus sitting on the sidelines. And it's also doing your diligence and finding the right property. There's all kinds of different real estate investments out there. And some people absolutely love a certain investment and some people hate it and prefer a different type of investment. So understanding what you're buying, I think, is the most important thing. If you're buying a high cash flow property and you go into it with the expectations that it's going to be as passive as a new construction property, it's not, right? And that's why you give up cash flow when you're buying something that is a little less passive. So, know what you're buying. I have a lot of high cash flow properties. I have new construction. I have a good mix of both. But where I see people going wrong is buying a property, but not having realistic expectations of what they're buying.
Right, good. Very, very good answer, Richard. Yeah, exactly. I agree with you. All right, so let's move into this movie, the bad aspects of investing. So again, my opinion and Richard's opinion is just our own opinion, but we've been doing real estate for so long, so we tend to think that we have a very good perspective because we are in the trenches. We consult with our investors, and Richard have done so many investment loans with investors for so many years, all throughout the country, all throughout a lot of different areas in a lot of different states, different cities. So my definition of bad about is just we've been hearing out there, right? There's a lack of inventory. That's true. And then there's a lot of demands. The interest rate is very low, so it's a great time to invest. And however, you have to know, where, you have to understand what are the facts out there. What are the information you're obtaining is good or accurate or not accurate, misleading or not. But sometimes when you look at the YouTube videos, you see some so-called YouTube entertainers that use some fancy titles on YouTube because they want the bait clicks, right? They want a lot of clicks. So they create this doom and gloom scenario. Oh, the risk is gonna crash. The prices are rising too fast. Don't do this, don't enter the world. You have to wait, whatever. So my quick definition of the bad is that you need to filter the good information versus the bad information, and don't let all those misleading, inaccurate, overhyped information you've been getting out there, right? You have to understand the sources that you're getting. I mean, again, a lot of YouTube entertainers out there, they are very good at presentation, right? They are actors, really, if you think about it. So their goal is to scare the heck out of you. Their goal is to get into their subscribing to their channels so that they can sell you whatever they want to sell you out there, right? I'm not saying selling is bad, but you have to find the credible sources. You have to find the most reputable sources out there. What kind of system you're going to buy? You have to filter away inaccurate, misleading, bogus information out there, and just take a step back and work with a system, work with a company, work with a investment club to help you do those kind of things. So the bad, again, finally, my concluding of the bad, my definition of bad is just that just be smart about it and do your research, and just at the end of the day, throw away those bad information, because real estate still is going to be good. Don't worry about this short term. People talk about crashing, correction, and bubble, all these kind of things. But at the end of the day, just commit to your goal, throw away all the bad information, and proceed accordingly. Take action. Surround yourself with a good team. Buy good property that cash flow, and have confidence in doing it. So that's my definition of bad. So Richard, what is your definition of bad associated with real estate investing right now?
Well, I would say, firstly, as you said, the bad right now is something pretty unique, at least in the last 10 or 15 years, which is that there's such a high demand right now for residential rental real estate that things that we're used to seeing in California or in New York, which is extremely high demand, low supply, multiple offer situations, bidding wars, we're used to that. However, I don't think we've seen it quite like this in out-of-state markets. And, we're not necessarily talking about huge cities either. And we're seeing increasing demand, which also translates to obviously renting properties quicker, but it's tough right now is the bad, right? It's tough to be a real estate investor and actually get something that's going to be done in the next 6 months. A lot of contracts they're selling are a lot further out, which is once again why it's excuse me, even more important to bite down on something soon. But overall, I know we're talking about bad, but overall, when you pair with where rates are, it is still a good time to jump in and to lock down a property. But another overall, I guess bad is rates are starting to trickle up. So it's imperative to try to get off the sidelines and purchase a property in whatever market it may be in and whatever strategy you may be trying to employ.
Good. Again, very good answer, Richard. And finally, the last category is ugly, the good, the bad, and the ugly. So yeah, I've been thinking about what is my definition of ugly in terms of real estate investing. Well, this is a tough question for me. So let me give it a shot. The ugly side of it, kind of Richard alluded to, is just that there's a lot of challenges ahead. So if you, especially when you buy new construction, I mean, with the acceleration of the lumber costs, for any investors that want to buy a new construction, I mean, you gotta be patient. You gotta avoid the ugliness of what's going on. You have to understand the reality of it, and the reality is, I mean, many builders in all over the country, especially in the areas that we are promoting our company, mainly in Florida and Texas. Many of the new builders, they are not even selling to investors. They are completely shut off investors from buying new construction. Furthermore, and they are not building enough. In fact, some builders are pausing in any further construction because the cost of construction is so high, they're not making any money. So we've been hearing, I mean, the tremendous imbalance between supply and demand. In some markets, the supply of homes is only like 2 weeks. I mean, is it amazing? 6 months of supply of home is what we call it, as a normal real estate market condition. In some markets, for example, in Austin, we have like 2 weeks supply of inventory. So that is really, really ugly. And yet, and prices are rising so much. I mean, especially Austin is an example. I know it's kind of a unique Austin market. I mean, a lot of people are bidding like 20 to 30% above asking. I mean, that is shocking. I mean, it's happening in California also, but yeah, a lot of California homes, like for example, if someone lists their price for 1 million and it's sold for like 1.4 million, something like that. Some crazy numbers. And Austin, same thing. Texas and Florida, same thing. The supply of homes are so limited, and the sellers, even right now as we're heading to the second quarter of 2021, a lot of sellers, they're still not selling. Post-pandemic so far, I mean, things could change, because if they were to sell their home at a very, very good price, where if they're going to try to move up in their area, they can't find homes to buy. So they don't want to take the risk of overbuying and move up homes. So sellers are not selling, and builders are not building quickly enough because the cost of construction is so high. For investors, I mean, one good thing you have, I mean, for those of you know what we have been doing all these years, because of my connection and the resources I have on the ground, especially in Florida and Texas, we have the ability to find builders who are willing to sell to investors. So that's the beauty and the tremendous benefit working with our network, the Yee Real Estate Network, by the way. So we can overcome that, but still, a lot of times, even if you're able to find a new construction, cash flow properties, I mean, here's the process, what's going on, especially in our network in Central Florida and in Texas also. You get in the wait list. The wait list will take 2 or 3 months. Okay, then when the 2 or 3 months of waiting list is over, then you sign the contract. Then the lot address will be provided to you, right? So you sign the contract on the lot. You pay your earnest deposit of a few $1,000s. Then beyond that, the construction timeline nowadays could be 9 to 12 months instead of typical 4 to 6 months. So by the time you get into again to on a wait list, then sign the lot contract a few months, then the timeline to build, it could be 18 months before your house is completed, right? So that's the ugly part of, for real estate investors, so hard. By the way, the ugly part of it, as a real estate investor, do not play the resale game. What I'm trying to say is, in the multiple listing service, the houses that are being sold out there in the open market, I mean, a lot of our investors located in California, I mean, you don't have the time to be part of the bidding process. I mean, you can bid on a home in Austin or San Antonio or Central Florida or Southwest Florida that we're promoting in an open market, in resale homes. You could be competing against 40, 50, 100 offers per house, right? So that's the ugly part. Don't enter into resale bidding war to buy your investment property. Go through a network such as us that already we have the connection with some builders that will open up their homes to investors, you know? So, and yet you're not subject to the bidding war, of course. You know, you get the lot you want, but still the timeline to complete the process, it'll take much longer than in the past. So be patient. That's the ugly part of risk investing, my definition. But if you're committed to your goal, if that's how you want to build your real estate portfolio, if you want to buy single family homes, especially, you know, 3-bedroom, 2-bath, you know, 1,300 square foot, you know, so, for the price of $180K to $230K, those are the sweet spot. Those are the best new builds, and there's not that many of them available. We have the inventory available, not that many. So just be patient with us. That's the ugly part. So, you know, the reality, it is what it is. So don't wait, okay? Don't say, oh, I'm gonna wait 2 or 3 years until the market slows down. I'm gonna wait to 2 or 3 years from now until the market crashed, then I'm gonna buy at 40% below market. That's not happening according to my data. So, right, you play the waiting game, you're gonna regret it, okay? So paralysis by analysis. So that's my definition of bad. So Richard, your final 5-minute interpretation of your definition of bad, then we will.
Or ugly. We're on ugly.
Oh yeah, I'm sorry, ugly. Ugly.
Well, I gotta say, you did a good job because you covered pretty much everything I was gonna say. I mean, the ugly is kind of similar to the bad right now, which is it's nasty out there if you're trying to be a retail investor, buying off the MLS, getting in bidding wars, wasting tons of time only to get bid out by someone who's paying way more than they frankly should be for the property. I've run into that myself. But the good news is it's not ugly in obviously the process that we employ by buying new construction properties, having relationships with the developers to where there is an allotment that they're not selling in the retail market, you know? So I think that's what a lot of people don't realize is most of this new construction that we are buying as investors is not available to the general public. And so it's almost like the VAP process, right? In buying. Now, the good thing is it's the process that we just was efficient in terms of the markets and SeeWing and us as investors till now, but it's worked out being even better because it was just an efficient process before. Now it almost feels like the VAP process, given that everyone else, I mean, it's right now, if I was to equate it to something, it's like Black Friday morning at Best Buy and everyone's throwing elbows at each other to get that next property and they're overpaying for it. Whereas, you know, yeah, we have to wait, but we could sit comfortably at home, get a list of the types of properties available. And then there's, you know, 6 to 8 addresses to actually pick from within that particular model that they're offering. And yeah, they may be 6, 8, 10 months out, which that's some of the ugly, but it's not as ugly as it is being a retail investor right now. So overall, I would say it's still good.
Absolutely. Well, I think we're running out of time. We love to talk more, but I think I just want to share a high level. I want to, give you some reality of this world. So again, if you're a committed investor, if you're dedicated, if you have a lot of confidence, if you have the money, you have the resources, you know, just work as a team. Now it's time to pull the trigger, because again, when demand exceeds supply, the housing price is going to rise, it's going to increase. And at the end of the day, that's what you want. You want equity appreciation, you want a good cash flow, buy in a good market. And that's our philosophy. Again, to summarize, be like Clint Eastwood, right? I mean, pull the trigger, okay? And just shoot the bad guy. Shoot the bad guy that are promoting all the negativities in the YouTube world out there. All the YouTube entertainers out there, they're the bad guy, and they also the ugly guy. The good guys are, you know, you get the factual information. You work with a reputable company that have access to the limited amount of inventory for real estate investors in good markets that can cash flow with 20 to 25% down. And that's what we do. Thank you so much for your time. Thank you, Richard Advani, our great partner, our investment loan agent for our network.
Thank you.
Yeah, thank you so much for your time. Now, I know you've been very busy writing a whole bunch of loans for your team. You're one of the top investment loan agents in the whole country. You're very successful what you do, and we have the same synergy, the same business model. Thank you so much, Richard Advani. Thank you so much for listening. Stay tuned for our future joint podcast. We're going to have ongoing between Richard and I. Thank you so much. This is SeeWing Yee from the Yee Network. Good luck. Thank you. And have a blessed day. Bye-bye.